All right. Happy week, everybody. This is Startup Brothers number 16. We're doing this. We're not stopping.
Can't stop, won't stop.
Yeah,
What's the
there's just
date
too much to
today?
talk about. Today is March 31st. Tomorrow is April Fool's.
Ho, ho, ho,
We're
ho.
already done with Q1. All earnings are out. Everybody's going like this or like this. We are now kind of cleaning up, I don't want to say the mess, but everything that really kind of happened from 2021. And
Yep,
that means SPACs, that
yep.
means IPOs, and ridiculous valuations of startups that the tourist investors, the tourist VCs, the tourist private equity money came in because when stocks went up, what do you do with all your cash? I don't know what to do with all of it. I have to
Yep.
invest it. And so, from our perspective, we have a lot of companies that have raised capital, lots of markups, but behind the scenes, not just us, but a lot of other people not only have slowed down, but a lot of companies are now coming back for capital because they ran out of it. They had to spend what they got invested, the VCs put into them, and their valuations are just still up here. And as we say, you grow into your valuations. And if you can't,
Oh.
what do you do?
Yeah, no, I feel like we've all heard those stories of where people hit the jackpot literally on the lottery, and it actually ruins their lives in many cases. They do silly things. Sometimes, we were talking in one of our last podcasts of how unicorns are created. It's almost like hitting a lottery
Right.
jackpot,
It used to
where
be.
you lose some of your scrappiness, you lose some of your common sense, and maybe make stronger, bigger, worse, quicker, sillier decisions. So I love these quick resets. I love coming back to reality.
And so we'll find the chart, but there's about 1,000 unicorns, right? A unicorn used to be this rare mythical beast. Now we have herds just roaming the entire world. And think about it, that's 1,000 companies worth $1 billion. That's a trillion. And
Yeah.
so the US like GDP is what, 30, 35 trillion. And so we know that this wasn't sustainable, but this is a spray and pray to some extent game, especially when you had Tiger, Cato,
Yep.
and all these other firms writing 1 to 2 checks every single day. But if
Yeah.
one went big, it would make up for all the others. Unfortunately, when you're going that fast, some worked out, but some haven't. A lot haven't. And especially
Most.
because the IPOs have not done well and there aren't any, and the valuations, even of real companies in the public markets, have come down. That means later stage is basically saying, great, I can't invest in anything now at a much higher valuation than we had previously
Yeah.
because the next level, the IPO, the initial public offering, won't accept it. The public won't accept it. Also, there's no M&A. So what am I
Yeah.
going to invest in? As we always come back to, AI right now is the only thing, probably 90+% of all Series A and growth that we're seeing for startups. So if you're not AI right now and like real AI, it is still very difficult. You have to grind.
And as a founder, I would be scared in the AI market at the moment, even taking on a massive investment, because one, that means you have to exit at a massive exit. When you take a lot of money, you have to sell for, 10, 15, 20 times the
Multiples.
amount, multiples of what you raised. In many cases, raising at a top, sometimes, mythical valuation is not a good thing per se for a founder. People don't realize that. And, sometimes it's that slogan, more money, more problems. And in my case, in my opinion, that means you have to shut up or put up. And that means you have to, have revenue that will somewhat qualify, as Trace was mentioning, grow into your startup, grow into your valuation. And I would be terrified if I had that. I mean, I've raised venture capital, but I don't have expectations that are in the AI arena.
Yeah, it's difficult. And so what we're starting to see now is a lot of bridge rounds, which is
Hmm.
what we like to say, is it a bridge to somewhere? You raise your pre-seed, your seed, but to get that Series A, it used to be like, oh, I'll have $1 million in
Yeah.
ARR, annual recurring revenue, and I'll get a term sheet. Maybe that was like circa 2020, 2012. It ended in 2015. Now you really need to be growing like 1,000%. And this isn't, oh, I have 100 ARR, $100, now I'm at 1,000. Or hey, I went from 1,000 to 5,000, like in MRR. Like this is, you need to be growing gangbusters to stand out as a non-AI company. Otherwise, what we're starting to see a lot of right now is a seed plus, a seed
Yeah.
two, a pre-series A, because founders, if you raised 1 million or 5 million, whether or not you didn't raise enough, you raised too much and didn't have expectations, you need more time. VC money cheats time. You were able to
Yeah.
hire, you were able to do marketing, and you were able to just spend it when you could have been a little bit more frugal and maybe got more clients, had more revenue, had better unit economics. And so now that a lot of companies haven't really raised since the end of 2021, early 2022, we're now 2.5, almost 3 years into what should have been generally a 12 to 18-month raise is now
Yeah.
being stretched. This is why you're seeing the layoffs. And everyone's like, I just need another 6 months, another 9 months to get through whatever this is. It's difficult. And they open up the round from the previous valuation. So
Yeah.
you've been grinding for 3 years, your valuation hasn't gone up because you either didn't achieve it or you underachieved what you were supposed to in terms of expectations.
Yeah. And it's this fascinating phenomenon. When I mentor startups, I like to remind them that 80% of business is business. It's AI, consumer product, doesn't matter what you're doing. 80% of our businesses are relatively exactly the same.
Yeah,
And to bring that all the way home is, how do these AI startups and companies make money? I would say, at least from the AI that I pay for, from this recording to ChatGPT, to some of the other ones, it's all subscriptions. I sell
yes,
subscription business, right? You buy sheets, you need them once a week, you order appropriately for how often you use them. I pay the $21 a month for ChatGPT, but right, it's just a subscription business. It just comes down to the same
right.
business model as every other business. So how do you make hundreds of billions of dollars? It's the same model as Facebook. Acquire users and figure out how to monetize them, because I keep getting free promotions to keep testing out our product. And from my perspective, it seems like they're just trying to keep us reeled in enough that we end up using their product, but they keep adding new features. And
Yep,
hopefully, from their perspective, what it seems like is that those new features are now worth subscribing to this service, right? It's a service. I don't even know what else to call it.
it
They
is.
hope that these freemiums will eventually turn into in-app purchases. But there's like 10 of the same companies doing the same exact thing, and I'll put in a new email address to get another free 75 hours.
Yeah, so a lot of people are tweeting about this, and I kind of got into a debate around this, that the valuations, oh wow, we're so back. Companies that have AI and very technical people, so they
Yeah,
actually can build whatever the AI is. It's not just a wrapper, which is fine. They're raising at 85 ARR, 150 ARR, like they're raising at a 4 billion valuation. I think it was Cohere, and they're doing 20 million in revenue. But like, okay, great, 20 million is
yeah,
solid. Is that worth a 4 billion valuation? No, but with $100 million, maybe they can get to 50 to 100. So then you're only at what, 80, 50 to 80, and you'll keep growing. And you just put money into your winners right now in AI, just like Stability AI kind of just blew up a little bit. The founder had some bad meetings, some other issues. They were valued at a few billion. They raised a few hundred million. The CEO's out, they made no revenue. It's difficult. People got excited, and exactly what Max said, free users. So when we're all crazed, we're like, ooh, which AI has the most users, because revenue is kind of irrelevant. Oh, they
yeah,
have 100,000 users. It's free. What's the engagement? Ah, no, they'll figure it out later. And so we've seen so many companies. I've seen dozens of pitch decks that you went from 0 to 100,000 ARR because everybody is signing up for
yeah,
everything. We're trying out everything. But then the churn is just like this. And they have a new feature, it's just slowly falling off. Oh, and then a new startup that does the same thing better for
yeah,
cheaper. So that's the difficult part. But one of the issues on the AI side is so many VCs aren't technical enough, myself included, to be like, oh, it's a
Yeah.
large language model. Oh, how large? 7 billion? That sounds right. Why not 8 billion?
Yeah.
Okay, why not a trillion? Like, I can't do diligence on this. I'm just like, you have users. Someone else talked about it. Someone smart is working on it. Okay, yeah, someone will pay for this.
And back to, these rounds going up, down, sideways. From my perspective, if you could just fill the round no matter what, up, down, sideways, backwards, to me that's
Yeah,
somewhat of a successful raise. We had a clip come out and we've spoke about it before. A lot of this is the venture capital's fault, or whoever's putting all this money in. We see these GPU companies skyrocketing. And do we know the potential? Do we even know specifically what these are? We know what the headlines are, but we don't actually know what's going on behind the scenes.
nope.
We don't know the technical data analysis. I'm not even going to act like I could even speak the language.
Right,
This
jargon,
is
jargon.
back to the startup throwing with your eyes closed darts on a board and hopefully you got the right one. But it does
Yes,
seem
every
like it's,
VC needs one.
and you have to. And it seems like it's getting a little out of hand. But we will find out within the next 4 to 7 years, because the valuations of these companies could return a fund 5, 8 times compared to, one startup that could potentially just return the fund once. The old business
Right.
models, the old companies,
And
and
we
quickly.
all need these. Yeah, and we exactly. It can definitely be faster because they scale faster. They can go and get more clients. They have a lot more capital. Everyone wants to try all this new hot thing. If it's just a boring, unsexy kind of B2B SaaS enterprise, you're just stacking clients. You go through a
Yeah,
sales cycle. It's not hype. You got to sell into a certain division, and it's normal business, as you were saying. We're getting back to basics, but we're kind
yeah,
of being spread out. And so we're losing out, I believe, on a lot of great investments that are kind of unsexy, but will make money in the more traditional sense of it will take
yeah,
years, not go to 0 to 10 million in like 2 years because it's AI and everyone signs up. So it's interesting because now we've gone the exact opposite where AI didn't really exist. No one really cared for it, but now it's AI, it's GovTech with Anduril and Palmer Luckey. Climate tech, I'm always happy that people are investing in it. But like, if you're a software climate tech, you're not really climate tech. Like, you need
no.
to do carbon capture, not carbon credits. Um, and I'm trying to think of what else was interesting and kind of fell off. Also, like food fell off, EV fell off. All the
I mean,
SPACs kind
remember
of
like
got
3D
everyone
printing?
excited. Yeah, right. We have all these trends. 3D printing was so cool. MakerBot, that was acquired and then kind of a write-off, but that was like 10 years in the making. Everyone was like, I have a 3D printer for this. So this is where it gets really weird in our industry is like, you want to invest before it becomes trendy, but just because it's trendy and a tier one VC invested doesn't make it real. When I see a
Yeah,
pitch deck where it's like, oh, there's validation because XYZ company raised, the answer is no, that's not validation. Validation is you have clients, you have customers, they pay you, they share it, and you get net retention value over 100 where like you actually grow them. So just because someone invested in a company like sneaker companies, after Allbirds
yeah,
raised a lot of money, do you know how many sneaker companies everyone looked at and everyone invested in?
yeah.
You follow the trends. After Beyond Food, Beyond Meats, there was Impossible, and then every single other one. And I looked at them. You have to build like the molecular infrastructure. You have to build factories. People don't realize what goes into this. They're just like, ooh, shiny object. They invested. It must be true. They did their diligence.
But even remember like prepackaged food, like the Blue Aprons of the world.
Yeah,
And they were one of those companies where I studied their business model and then sort of reverse engineered it based off of what I would do myself after I believe they got acquired for almost nothing. They raised so much money that they wanted to do everything themselves. And
exactly.
as a startup, you need to continue to always be, this is our slogan, be in crisis mode and always be scrappy no matter how much money you've received in funding. I've had this in my career where I've had a bank account that I practically had full control over. and it had a lot of money in it. And, you want to do everything your way, but that doesn't mean it's the best way. You want to do things in-house when really maybe outsourcing or using a third party is one of the best options. From my understanding, they did all their own warehousing, all their own food prep, all their own delivery, when these three things could have been split up to third parties that are experts in one of the individual aspects of
Exactly.
the business that they need to excel in. And then you could also hold them accountable because they need to be excellent and stay in business just based off of capitalistic practices. Otherwise, you could replace them and use somebody else. So using all of the capital up front to build the infrastructure yourself that you don't have to do. And I've been guilty of it as well. When, I started my business, I thought I could distribute my products myself and compete against
Yep.
the distributors. Let's just say that. And full circle, 4, 5, 6 years later, I am back in the pocket of the distributors because that's what they do best. I will do what I do best, and then I will do everything in my power to make sure that they are successful. But I cannot, I have, and I've tried because I had the cash and the capital, but get back to the scrappy mentality. You get
Yep.
money in your bank, use it wisely. Don't be cheap. Don't be overindulgent. Stay scrappy no matter how much money you raise.
All right, so fun tangent, me geeking out. So Blue Apron raised hundreds of millions. They went IPO and they went down probably 99%. But
Yeah,
there were other similar companies in the industry because everyone had their own. There was Munchery, they went bankrupt.
really.
Then there was Freshly a few years ago that acquired by Nestle, I think for 1.5 billion. But then they shut down the consumer arm of it as well and have some other issues. So full circle, as you said, Blue Apron had a factory. They still do, even though
Yeah,
they're generating like 100 million revenue, but they're still losing. Mark Laurie of
yep.
diapers.com and jet.com
That has Wonder.
acquired them for about 100 million or so, took them private because they had the supply chain, they had the factory. He's doing a food company, and he himself for Wonder, which started out as a food truck of gourmet food locally after raising like 250 million, pivoted. So that's not happening anymore. Now he raised another few hundred million to do restaurants, which apparently sound, and I've heard they're good. I have to go find one, but doing fast food gourmet. And then speaking of valuations, his last one was like 2 or 3 or 4 billion.
Yeah.
He just raised another 700 million on what we believe to be, it's a no valuation. So the assumption is it's an uncapped note or safe because there isn't agreed upon valuation. There's definitely some other ratchets and liquidation preferences, but even him raised 700 million, but they couldn't value the company
Yeah.
because is he worth $4 billion? No, but we'll figure it out later. It
Yeah.
is tough, and like WeWork out of Newman is like great. WeWork was
I'll
worth
buy it back.
47 billion. I'll buy it back again for 500 million. Roll it into my two real estate companies, Flow or Carbon Flow. One's crypto, one's real estate, and I'll just buy it back later. It is some weird things happening.
It's getting really weird, and I don't think any of these companies really make money. And so it's a weird phenomenon where you have a brilliant founder that raises AI type of valuations in cash, and then you have AI doing AI unicorn, weird, mystical valuations and such. But as we just mentioned, these companies, business is just business. Um, you have to make revenue and then you have expenses. That's all business is. It's practically just two numbers that we have to
Yep.
fine tune slash even start the numbers in the first place. I just got a snail mail from Wonder Food
Yeah, wonder.
Service. And I read this guy's whole story. I saw him speak at Bloomberg. I don't think his companies have ever, got, I look up to him, to be honest. I don't think he's ever had a company that's been wildly successful when it comes to making revenue versus expenses. And I've always think the expenses have always outweighed the revenue. But let's go back to from being a founder and a starter. Luck and timing
Yep.
are on our side, not necessarily on the VC side.
Yeah. And so in his case, he is someone that's acquirable, right? So
Yeah.
after diapers.com, his other investors, you know them, Primary and a bunch of others, were like, oh, you want to start another company? Here's a bunch of money. Like you sold diapers for 600-800 million after Amazon like tried to cut them off and
They
everything. He
crushed
had
them.
a grudge and he built Jet to take on Amazon. And who is Amazon's number one biggest competitor? Starts with a W and ends with Walmart. Exactly. So they bought him because he knows the business, and for
Yep.
billions of dollars, what was it, 3.2 billion, they acquired him. Right, he is acquirable. Then they bought Bonobos because they wanted Andy Dunn when they tried to get back into CPG and be cool. They buy people. He had
Yeah.
business, as you said, like he built an Amazon competitor, but they wanted him. He needed to run a division, and that's worth billions of dollars to companies that have hundreds of billions of dollars in market cap. It is, as we like to say, a war out there, and they are hiring generals, they're hiring
Yep.
lieutenants, and if you have some technology that is your cannon, that is a new musket, some type of new weapon,
Mm.
but these companies are going to war. And when these companies, Microsoft, Amazon, Nvidia, that are worth $1 to $3 trillion, 0.0000000
12.
invest $1 billion literally means nothing to them. They make 12 billion to 20 billion in profit a quarter.
Three
So
months.
this is who you're going up against. We used to joke, oh, why won't Google do this? They're not going to do it. Why won't Facebook do it? They don't care about this. Why won't Microsoft do it? Actually, okay, Microsoft might do it these days. Of all things, Microsoft is now like, hey, it's
Yeah.
Microsoft's turn. And then Nvidia just has so much money in stock that they don't know what to do with it. They're investing in everything. It is such an unfair advantage.
I don't even know how to follow up any of this.
Yeah.
It's become meme coins, which give me,
What else
buy
are we
this
supposed to
meme
do?
coin, and I go, what's the utility? Like, what is it? What is it? Right? I can understand Bitcoin, Ethereum, whatever Fugazi it is, but I could at least see a direction. There's some sort of correlation to something in real life gold, right? These other ones, I feel like we're living in a meme coin world. And to be
Yes.
fully frank, I like when it goes, the winters, the non-winters, the summers, the falls of these, type of businesses, because we get to see it play out in real time. And I don't want to
Yep.
rush the future, but I'm excited to see what happens in the next 3 to 7 years.
Yeah. So we're not even at the product market fit of AI right now. We're actually building the picks and shovels, the large
Yeah,
language models. They're still testing it out. OpenAI is definitely the quote unquote winner right now. And the rumor has it is that Microsoft and OpenAI are going to build a
they're getting in the
$100
bed.
billion supercomputer. That is ridiculous. That is the entire valuation of OpenAI, and like 1/130th of the 3 trillion that Microsoft has. So still amazing, and only they can do it. So
Yeah.
they are literally like the gods of this world, and big tech is getting bigger because we used to have M&A. It used to be nice. Hey, I'll acquire you. Here's money, and it'll take a year or two to integrate. Now they're just hiring away teams, and the government can't even catch up. Like they'll definitely investigate Microsoft for
Yeah.
taking away one of those companies, and they're just like, "Hey, we'll give you millions here, stock. Like that's not working out. We lost $1 billion. Great, just come take us. We're calling it the new M&A." Like right now, it's shoot first, ask questions later. Literally cannot move fast enough. We need talent. We have all the money. That's not a problem.
And, when the VC money dries up for the other companies, Uber used to be super cheap in Manhattan. Now it's pretty
Oh
outrageously
man,
expensive.
they're profitable and worth
All of,
130 billion now.
yeah, even like all the last mile deliveries. Those were the talk of town for 4 to 8 months. And
Yeah,
from my understanding, I haven't seen them, right? They used to be everywhere on the side of
gorillas,
every bus.
GoPuff,
GoPuff, and they raised it at 15 billion in 2021, I
billion.
believe. Billion.
They were rumored to go IPO. They were hiring bankers.
Not anymore. But these are businesses, and AI is the same business. We just have to make some money, get some users. But now they're allowed to do silly things, and the talk of the town is responsible AI. I don't even know what that means because we could assume the movies we've watched in the past might come true. We'll see what happens. But from my perspective, I'm glad it's happening. I hope it happens, and I don't even have how to speak on it anymore today. It's not a business I'm in. I'm in the business of businesses, so I understand that
Yep.
how they try to make money, and I love the NVIDIAs where it's this part of business over here that doesn't actually do what we're talking about, but it actually does all of the computing. But the more I watch about that CEO, he says, keep it stupid simple. You
Right.
don't need this, you don't need that. Just continue to be clever, continue to be scrappy, and continue to iterate. And most importantly, it's very admirable is he loves what he does. And as a founder, I get questioned all the time how when I had to downsize my business and do some layoffs, I was incredibly scared. Am I going to be able to, and capable of running this business on a smaller team? Am I going to be
Yeah.
capable of doing things that I had experts on my team doing? And when you downsize, you see what you're really capable of. And, just like these companies raising their last, a bridge round, and from, as we were saying, it's relatively impressive if you could actually raise it. Your investors gave you money and they're willing to keep you alive because, they know that, the tide is crazy right now. The waves are pretty large and maybe they're not in your arena, but maybe they believe your arena is going to come back. But what I've noticed is, and always one of those stories, when you get to your last penny, when you start getting beat up, when you start,
Yep.
hitting rock bottom, that's when you figure it the F out. That's when you start figuring it out. So, a lot of people get blinded by, raising a bunch of capital. And, the longer you're in business, the longer you're in business. And when you meet a brilliant founder or a clever, smart, good enough founder, who's crazy enough to continue wasting slash building his life around this, whatever what he or she's building, you have to be a sick puppy, to just take a salary, to, to wake up every morning and do this. But people ask, you do this, you do that. How do you do 10 things at once? I go, well, one, probably my ADD. Two,
Yeah.
I have no choice. I wake up and do this. I always joke around. I sometimes would love corporate freedom where I just do sales. I sell something, I get somebody on the phone, and then I hand it off and I make my commission. But the grass is always greener. But entrepreneurs need to exist. I'm happy there's crazy funding out there giving some people who shouldn't, who maybe would never get funding in a different environment, getting funded. And I'm also sad about the founders that are not getting funded at the moment because there's a shiny object.
Well said, and a great transition kind of into our last topic is I met with founders years ago and the rounds were closing within like a week. They're like, hey,
Yeah,
it's closed, it's oversubscribed, too small of a check, 25,000, 50,000. It's a 25 million valuation. So I have them coming back now at half the valuation. They're like, hey, let's catch up. That check, are you still kind of interested? I have a lot more traction now at half the valuation. And I have nothing against them for that. I'm actually like proud of them. It's humbling. Not that you want to be humbled, but that's what you need in business. We always want fairy tales. I raise a million, 5 million, 20 million, 50 million, and it all works out. But what you don't see behind the headlines, behind the Forbes 30 under 30 and all the tweets and all the podcasts is that, hey, how's it going? Killing it. No, you can't say anything else. It is a sad,
yeah,
like mental facade that you have to say it's going well. So there are group chats, there are Slacks, there are meetups where like you could kvetch Yiddish for like actually talk Tachlis. Like it's hard. It is so hard. I text, I email, and I meet my founders, and like it's a
yeah,
struggle. And my job, my fun, my passion is get them to open up. When they tell me things are going, I'm like, shut up. I know you're lying. Like, come on,
yeah,
it's me. Like, let's talk because you can't talk to anybody else. Your employees, most of your other investors either won't understand or don't care because if it's not working, I'll move on. You're not going to be my big hit. And so everyone is always like, oh yeah, you're winners, like you should spend the most time with them. I spend most of my time with my not winners. They need my help. That's
Yeah,
where I'm in the trenches with them. No, I'm there supporting them. I'm telling them that my other companies, my other investments, other founders, other people
similar.
are struggling too. I always like, you're not alone. No one will say it out loud, but you're not
Yeah,
alone. You're doing great product, you've done well, but your sales you missed, the people that you went after don't care,
yeah,
and the timing of the market went south. That's where Max said it's about timing and luck. So it is a time to learn about business, that money can't cheat.
yeah,
And also, it's just a time to build a real business. So a lot of them will get left behind. And that's just the world we live in. And that's actually where we used to be. So it's been 10 years since this has really happened. And it's like kind of a necessary evil. But as Max said, or do you want to wake up every day doing this? We're seeing a lot of founders leave.
yeah,
And that's fine. They're burnt out, whether it was COVID, they just don't want to do this anymore, they vested. You just don't have a passion. You don't waste your time. I tell founders, we have a few of the 60 investments, just like stop. I'm proud of you. I know you tried your hardest. You did everything you could. It didn't work out. Statistically, it's not going to work out. You're in the business of failure. 90 plus
yeah,
percent of you will fail. So don't worry. Oh, but my investor money. No, we gave you money. We knew the risks. We are professionals. We're big people. Don't feel bad. Take care of yourself. You're having a kid. Stop it. You have a
yeah,
few months of runway. Pay yourself. Stop it. Take care of yourself. We know you're not going to be our big hit. I'm not going to live on the street because you're not going to be successful. This is where the founder friendly comes in. Have these hard conversations and move on. There's a lot of talent locked up. You are better suited at other things, and the grass may or may not be greener, but what you're doing now is not it.
yeah. I go on LinkedIn every day. I go to these conferences. I go to meetups, and you see the sob. I don't mean disrespect. You see the stories where people are, I'm officially closing down my agency. I'm officially closing down my
Yep.
startup. And most folks don't understand when they tell you that they're closing their startup, that's been a 9 month process and incredibly hard decisions to get to that point. We don't want to do
Yeah.
that. We will spend our last penny, our last ounce of energy, emotion, physical being to make sure that this vision that we put on paper that came from our head turns into some sort of reality. And I see it happening more and more. I go to these direct to consumer meetups since it's a business I'm in.
Yep.
And without sounding like a bad person, I'll ask 10 people, 10 companies, are you guys profitable? And 9 out of 10 say yes. And as Trace was mentioning, we know the answers. You're lying.
Yeah.
And I've been there and I've done that. So that's what I admire about venture capitalists, private equity, angel investors who've started businesses, who've been in the trenches. Most generals, were on the front lines of battles. Most
Yeah.
generals, sergeants, right? They've literally been in the trenches, and this is a war, and you're fighting against all the odds being against you. And the number one thing I hear is imposter syndrome where when we talk to you about our businesses, we're in a suit and tie in our head. We're
Yep.
driving Ferraris, we're talking with full confidence. But when I get back to my room, it's taken all off. I'm in ripped up clothes. I have holes in my socks building this business. And it really toughens you up, but it's just for how long can you do it? So that's why I always mention, start a business as young as possible when you feel smart enough, of course, or you feel like you could learn quick, when you have very little obligations in life and responsibilities. As Trace mentioned, I couldn't imagine, having a child, having to support a family. I see where stability becomes very valuable, where, healthcare is taken care of. Most folks don't understand. I have to pay taxes in 6 different states. I have to get
Yep.
healthcare. And weirdly, it's a business everybody's trying to screw you over while trying to build this business, while logistics is falling apart. My warehouse is screwing me over. My products might have a recall. My prices are fluctuating. World circumstances are coming at me. Amazon changes their pricing. My website breaks. It's just endless. And, I feel privileged that I have fires to put out. I've built something where fires do matter to be put out.
Yep.
But it's not fun. I don't have a fire extinguisher. I'm doing stop, drop, and roll on most of these
Yeah.
things. And I have scars, battle wounds, but having Trace and venture capitalists and angel investors like Trace who care, you're not just a deal, who will admit we lost together and we didn't lose.
Yep.
It's just whatever this venture was, move
We
on.
lost this battle,
And
but not the war.
exactly. And worst case, best case scenario, say you have the wherewithal, you have um, the jump start to start something new. He's on your side. These venture
We've
capitalists want
invested
to
in a
refund
few
you.
companies. Yep.
Yeah,
Yeah.
that's all I got to say about that. I could go on and on.
Yep. So that's what we'll end it on. Some wise words from a seasoned entrepreneur and operator.
And I don't want to be seasoned. I don't want to do any of this, but that is the beauty of it. Just
Yeah. Yep. Gotta be a little
7 to
salty.
10 year overnight successes. So the odds are against you, but no, find people who are on your side. Find a mentor. Find an investor that cares.
And love those that love you first. Good night.
Exactly. Good night. We'll see you out there.